soil. A fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and Xcredi utilities, and ModuleX.
Ladies and gentlemen, this is Adrian Zdunchik, CMT, Charter Market Ignition. Some people know me as CryptoBurb, and I'm here joined today by my good friend Ivo Grigorov of our excellent partner at Credify, who's been, well, not once, but it's actually a recurring thing. It's happening to be a recurring thing for us to host you on our show. So welcome back, Ivo. How's it going?
Thanks. Yeah, as always, it's a pleasure to be here. Thanks for the invite. Well, exciting times. I mean, it's been quite an eventful month, both for the overall market, but also for Credify itself. So, yeah, we're pretty excited also for the near future. Very, very busy in terms of development. So, yeah.
Whenever I ask Ivo how you're doing, you always say that you are busy. It's hard to believe otherwise, right? You guys are working very hard on your team. Congratulations on the new releases. There's a lot to be talked about. So, first and foremost, Credify obviously has grown a lot. There's been a lot of good tailwinds for the Credi token itself. That sort of represents a little bit on the sentiment of traders for Credify. So, if you were to put it in your terms before we check on the charts, the temperature on the market, how's it been to you? How do you see, as Ivo and as Credify, how do you guys see the market these days?
Well, I mean, of course, this is not a financial advice or anything of the sorts. I mean, it's our own opinion, but to be honest, we have always believed that, the market is gonna pick up even during the past 2-3 years. We have not stopped developing for even a single day, and I think that people are starting to catch up with the potential of what's about to come. I think people are finally realizing that and I'm not speaking about pure speculation or pure price action. I'm just speaking about the potential of the technology, the potential of actually, having financial assets on chain, trading them, and overall, basically exchanging goods and services through that, completely on chain. So things are really picking up, and I'm quite sure that in the next couple of months, it's even gonna be, it's gonna expand exponentially, let's say.
Mm-hmm. Yeah, I'm with you. The market has been somewhat generous overall, right? We've been seeing ever since the bottoming out, with the catastrophic FTX collapse in November 2022. We've grown a lot as an industry. We've grown for Bitcoin to be a 1.3, 1.4 trillion dollar asset. Ethereum is nearing 450, basically, right? 4.5. Almost right there. It's nowhere near compared to Bitcoin. However, it's definitely ramping up nicely, right? Driven also by the ETF approval rumors, which we'll cover briefly. However, let's give it a little bit of a treat to our viewers and listeners, because eventually, what's cooking into the market. What's cooking in the market is it can be clearly seen that out of the top market capitalization coins, let's say having having Bitcoin in the red curve right over here, returning so far on the year-to-date basis, 56%. It's somewhere, well, arguably in the upper half of the top coins returning, right? Because in the end of the day, on the far extreme, we're talking basically on the XMR, right above minus 15% year to date is Stellar. XLM, Link, Chainlink is only 7% up, which is pretty interesting, right? Because that's quite a heavy big player. And at the same time, when we compare that and put that next to, let's say, Bitcoin returning 56% year to date, is 50 percentage points basically more, right? Needless to say that, for instance, the BNB to USD is 95, almost 100%, right? Just from a couple of days ago. The peak itself, was right there for 159%. On the 6th of April, from what I can see, for BCH, which is interesting. However, there is this overall rising tendency with a little bit of a slowdown lately, right? We can clearly see that and track that from basically anywhere from March or February until the very peak of the, where the actual peaks were, early and late in March or early in April. There's been a little bit of a cool down period, right? There's been a little bit of cooling down, a little bit of a slowing down, corrective period. A lot of coins, a lot of altcoins, have taken serious hits. However, there are coins that that are doing particularly well, right? And that potentially may be because, well, if we track the Ethereum, which is actually right here, with a little bit, right above north of Bitcoin, 58% year to date, kind of like it's close. It's closely tied to what Bitcoin was doing in trading past couple of months. However, this recent surge from 30% return, 30.52, all the way to 60, right? Pushing this significantly, 30 percentage points. That alone was driven particularly by the actual rumor of the ETF approval, right? And some traders, some investors, some experts anticipate and forecast basically 60% rally after the ETF approval comes in. What's your take on that, Ivo?
I do think that if the approval comes in place, basically, surely there's going to be a lot of liquidity entering into the market, as we have seen also, with the Bitcoin ETF. On the other side, just purely from regulational perspective, I mean, we've got the Bitcoin ETF, now we have the second, basically biggest currency out there doing an ETF. It shows that market is getting more attention and it's getting more serious than ever before, and it opens up the doors for a lot of new, let's say, instruments which are going to be out there in the near future, because Bitcoin ETF, also the Ethereum ETF, these are financial vehicles which are taken like from the traditional financial market, and they allow actually big banks and institutions to enter the space. But the thing is, they also indicate that soon rather than later, there's going to be, let's say, indices on different cryptocurrencies, let's say maybe as we have seen, S&P 500 or, FTSE 100 or whatever it is. I'm quite sure that the next step would be this, like you have the first two ETFs, then, at certain point, I'm sure that somebody is going to do regulated indices on different cryptocurrencies, and overall this basically validates the whole market, and it kind of brings us onto the next level, onto the same, let's say, playing field as biggest companies out there. Let's say S&P 500 is the 500 most profitable and recognizable companies, let's say, in the US. I'm quite sure that in the near future we'll see, let's say, top 100 cryptocurrencies, in the form of an index which is traded, let's say, on Nasdaq or somewhere there. It's just, as I said, it not only brings in liquidity, which of course will expand the market itself, but it has like this validation point and opens the doors for different vehicles which can be associated with the industry as a whole.
True. There is so much truth in what you mentioned, right? From what I read from CoinDesk again, there's a little bit of a warning, obviously, for the price correction, right? Which is something interesting. I'll comment on that briefly in a moment. However, as we read, 6 issuers, including BlackRock, basically filed updated copies of their Ether ETF proposals, right? And I might be wrong. From what I understand, we're actually waiting to hear for the final word from the regulators, from the authorities, on the approval or denial later today. Is that right?
To be honest, yeah, I mean, we have heard there were a lot of, let's say, rumors around it also like a couple of weeks ago. I think it should be somewhere either this week or next. We should hear that. I'm not sure whether it's gonna be today though.
Mm-hmm. Okay.
Maybe I have missed the latest news, but yeah, we were too busy with our own ModuleX opening, which was something within Credify.
Correct. I'd love to get on that right in a moment. However, this is a little bit of a discussion. The market, a little bit of a model, qualitative model. That eventually translates to the news anticipation. Whenever there is news anticipation, and whatever that is an FOMC, that is payrolls.
Yeah.
Non-farm payrolls announcement, that is an inflation data coming through, right? This is like I said, FOMC decision. This is Bitcoin ETF approval, right? This is Ethereum ETF approval. All of that typically tends to make us traders anticipate, make those assumptions. And because we like to speculate, because we feel desire to actually bet on those things, we need to buy this asset, which typically boosts the prices eventually. It increases the demand. And this is what typically drives the prices higher towards the anticipated event announcement, right?
Yeah.
Throughout the announcement of the event, for the particular announcement, there is typically a lot of noise, a lot of volatility that is local, that is temporary, right? The market fluctuates at typically higher, increased, elevated risk levels, right? That the price conditions change faster and in bigger kind of like vertical distance. That's what you read is the amount of noise. So that's where you get a lot of fake signals, a lot of false breakouts, a lot of those traps that really do not contribute much to the overall prevailing market tendency, right? They tend to be a little bit of a staring, like someone comes and stares in this big jar, right? And then they just walk away. And what's left is the entire graveyard of that portfolios for many traders. So typically, a little bit of a perhaps caution play for everybody. Those types of events typically have only short-term impact, right? They do not impact the bulls or the bull or bear market. So this is short-term impact. Please mind that. Also, this is a source of price shocks. It may happen that there are going to be a lot of price shocks, like massive surges or massive dumps, basically on the market, right? Which translates to perhaps everybody not really wanting to be fully leveraged or just fully loaded. Trading in noisy, volatile event days is not safe at all. Basically, most often it's a coin flip again, right? Because at the end of the day, this coin flip statistically proven, gives you a little bit of like a 50-50 chance. If you keep betting, and you keep winning, well, this is more due to the luck and more due to the chance than an actual skill of being a good forecaster. And mistaking luck for a skill in trading is basically what leads to ruin. So please take account of that. If there is any profit that typically appears, it's always, at least recommended to think through of the options of exiting, because they are not lasting. Like I said, it's a little bit of a coin flip, and there's a lot of chop back and forth. So if there's a profit, it typically gets reduced. So buy the rumor, sell the news is the main heuristic, is the main reason why we would do those actions. And the bigger the disparity, the bigger the expectations versus reality difference, the bigger the volatility, the bigger the risk, right? However, what happens right after those types of plays is the market comes back to the main dominant tendency, right? Which in Ethereum case, for instance, is a little bit more stagnant, is a little bit more flat. It's much flatter than, for instance, for Bitcoin for comparison, right? Which is interesting because at the end of the day, Ethereum, even though it's kind of like matching right now the year-to-date return of almost 60% for what Bitcoin has as well. This massive surge was of 20% day surge was basically the breakout there. However, we're still in this sideways territory with the flat, slow it down bull market. So we are probably dealing with a lot of uncertainty overall. We are dealing with a lot of non-trading environment, right? So take it with a little bit of caution because the market is not trading; it's just moving sideways right now by definition, right? It's just in the upper part of the sideways. Here is where we are. So there's no confirmed breakout, for the new all-time highs. There's no new confirmed breakout. The trend has slowed. So, it's easy to get trapped in such an environment. And ultimately, we are talking about this positive tendency and the positive expectations that we can have for the market driven by Bitcoin. In June, right? The markets tend to typically rally pretty nicely in the June period. That translates to more market optimism, translates to more satisfaction, to more money being deployed in the market, to more enthusiasm, better sentiment, and which in turn may also go very positive to the credit chart, right? To the credit token itself. Before we move on, there's a shout out to Jeff Hirsch, who's an excellent, really godfather of seasonal studies. He prepared this chart for us, so huge shout out to them. You can find him at Almanac Trader, my good friend, legend, real legend. And this positive impact may actually come into fruition for the credit token chart, right? And there is a lot of good news to be said, and for everybody watching and listening, this is a kind of reminder that we are partners. So I might be a little bit biased, though the things are looking fairly nice in the overall regime. How do you see envision from your end? How the Credify performance has translated so far.
Well, to be honest, I have always stated that I'm a bit more of a fundamental guy. I have worked for a couple of banks. I have tons of experience in valuation of credit risk and overall portfolios and companies. And I've always said that the price action of a particular, let's say, token or a stock or a share doesn't really reflect the value of the company and the potential of growth of the company. I mean, one of the most important things, anybody who has financial literacy is cash flow management and overall the basically the revenue and all the other let's say stats of the company rather than just the price of the token. So I have always stated that we're pretty undervalued in terms of what we're offering to the market, in terms of the market gap which we're trying to cover. So at the moment, only within the EU where we're focused and located in, only here there is 100 billion funding gap for SMEs, which we're trying to cover. I mean, we're very far away from it, but this is the market potential, let's say. Then on the other side, we have already gone so far ahead in terms of technological development. I mean, we have compared to other projects which were focused, let's say, on marketing or just spending their, let's say, raised funds on, at least in my opinion, on the wrong things. We were focused on basically developing, and that's why we're actually able to start releasing. Once like this bull market started happening, we were ready to start releasing and rolling out like products and services, which I think quite a few other projects are very, very far behind. Yeah, I may be biased, but to be honest, even at the current chart, even looking at the price, we're way undervalued. It's just we're already doing positive revenue. We're already having positive cash flows as a company, not from token perspective. We are about to have our first profit share through Xcredi in June. We just released our security model, ModuleX, and we're about to release a couple of other major products out there, and two more big partnerships are coming in terms of announcements. So there is a lot to look forward towards the end of Q2, and it's going to be done step by step. And I think that the chart will start looking even nicer than now, let's say. And yeah, as I said, I'm really, really bullish in terms of what we have of development, and I'm sure that investors will be happy at the end result as well.
Right on, right on. What cannot be denied, because eventually the art of forecasting, this is an art to a large extent. However, what I, as a CMT, as a channel market technician, I truly appreciate is reliance on is reliability of the facts, right? We use the past evidence, the past historical data to make certain bets about the future, and the more data we have, the more of the better accurate expectation becomes to hope for, let's say, the average expected result, right? So in those terms, the 200-day moving average, which is this for all the audience and viewers, here is this grayish line, this a little bit of a thin grayish line. It keeps climbing, right? It keeps climbing not only from 2023 all the time with a little bit of turbulence, throughout the Q3 2023. It also keeps climbing even more aggressively lately, right? From 2024 onwards until now. And what cannot be denied is that this 200-day moving average, it actually represents the primary dominant market tendency, aka bull market or bear market. And as it was in the bear throughout 2022 with the falling 200-day average, ever since 2023, there's been this massive surge, massive reversal, very aggressive growth eventually. And it's also very constructive on the price action manner, because that's been a massive, well, from the price action Dow theory perspective, it's been a massive, some sort of like a cap and handle pattern with that basically translates to a lot of accumulative tendencies, to a lot of accumulation kind of like type of a thing, right? And recently I marked some time ago this massive breakout early in March that actually pushed us outside of this cap and handle type of accumulation, basically pushed us higher, right? And ever since this breakout, the Credefi token actually surged. It was 3-4x almost, right? That was a very, very powerful movement. Yes, there was a little bit of a correction, of a slowdown, with 40, 30, 50% retracements, which is fairly typical for what we've seen overall across the crypto market. However, the main message is that we are in the bull market, and there is no way to deny that. The main trends are pointing upwards, right? So even though there is a little bit of a slowdown, the tendency, the main rule of thumb for buying or selling coins, tokens, asset in the bull or bear market is basically whenever there is an upward positive trend and it tends to go up on average, it typically pays off nicely in hindsight to buy the dips, to buy the to buy the lows on an overall otherwise uplifting market, right? So something perhaps to consider, some food for thought, especially since Ivo here mentioned a couple of other things, right? Such as, for instance, the ModuleX. So congratulations on the launch. That's a big milestone. Let's talk about the ModuleX for a couple of minutes to introduce it properly to our audience of listeners and viewers. Shall we?
Well, this is I mean, we have written about it, and we actually started the project. Our tokenomics ModuleX is a core part of also our business model. So it is a security model. I mean, we call it ModuleX, but it is a security model. The prime idea behind it is to be as a third barrier in terms of security. In terms of security for the lenders which are onto Credify's platform. So, our core business is lending and borrowing, different crypto assets, and lending them out towards SMEs to finance their operational needs. However, our three-layer security involves, assessment and risk management done together with Experian. Then there is the collaterals. Our collaterals are only connected to real-world assets. Currently, they are actual tangible assets in the form of pledges on land, pledges on receivables, and so on and so forth. But something, and here is again something to look forward to, we're also starting to accept tokenized assets. So tokenized real world assets, however, only from vetted and partner companies. So, we wouldn't accept any tokenization. We accept only particular ones. And of course, the company again goes under, scoring and monitoring with experience. So these are the first two layers. And then Module X is technically the third layer of security, which we have implemented, where people can actually stake their credit tokens, no matter from where they have acquired them. They can stake it in Module X for a certain period of time. The duration is 6 months. Once these 6 months actually end, what they receive back is X credit, and the credit which is staked within Module X is burned. So this brings the deflationary kind of, it is our deflationary mechanism for credit. However, Module X is implemented with an algorithm with a bonding curve. So the more credit is staked, the harder it is to be, to mint X credit, which is our governance and profit sharing token. So if now, let's say we opened it with 1 to 10 ratio, the more people stake, the harder it's going to be. So it's going to be 11 to 1, 12 to 1, and so on and so forth. So, credit is not going to disappear, but it's going to become scarcer. The total supply was 1 billion. Now it's around 950 million. In the near future, it's going to be lower due to the burns from Module X. In the meantime, X credit is going to be also scarce because the minting gets harder with each credit staked, and again, people who have obtained already X credit will be able to actually take part of the profits from the company itself. We'll be able in the next 2 years. We're going to start implementing the governance of the project. So at the end of the day, Credify will be, let's say, to some extent, completely decentralized. The decision making is going to be completely decentralized, but that's only after we have implemented and basically released all of the products and utilities which we have stated from the beginning. So we do want to have kind of this vision of actually having a financial, let's say, institution encompassing decentralized and in the hands of the people at some point.
Mm-hmm. Okay, that's quite spectacular, right? I mean, first of all, accepting the tokenized partners is one thing. Being able to take the actual profit share, on a fully integrated manner is something that I could imagine a lot of community members, a lot of traders may be very interested, as well as the fundamental traders, investors, in some sort of form of dividends to an unofficial extent. One thing that I'm wondering.
We don't call them dividends.
Yeah, correct. Obviously,
Yeah,
correct. That's
but
what I said. Unofficial, right?
yeah,
Although eventually that's what it translates. Let's say in the simple language for those who come from the outside, right? Because at the end of the day, we do want to grow as an industry. We want
yeah.
to spread the message. We want to spread the Credify message, out to the world, not only to Web3 industry, not only to the DeFi industry, also to the Web2, to the traditional finance, right? So having ModuleX as a little bit of a bridge, Simon, between the DeFi, between Web3, between Web2, this entire traditional finance region is something to definitely look forward to seeing how it goes. Is there anything else, Ivo, that you think our audience should know about ModuleX before we start wrapping?
Well, technically speaking, I do suggest everybody just to try it out. I do think that there is a good reasoning behind acquiring some credit, but also acquiring some X credit through Module X, in order to basically utilize the full potential of Credify, because as I said, like there's also gonna be different utilities. It's not gonna be only the profit sharing, but also there's gonna be different tiers in terms of how much you receive when you lend out. There's gonna be other incentives. There's gonna be insurance for holders of X credit, also for credit as well. But the best would be a mixture in order to fully be able to benefit from everything which we have in place with Credify.
Okay, so
And yeah, the sooner you try it out, the better, because as I said, it's gonna only get higher the more people stake. So yeah.
okay, so there's some positive encouragement, obviously, for everybody to go ahead and check out all of the details at Credify_finance on their profile on X/Twitter. I've already got used to, I think, calling it an X, which is something that I wouldn't expect. I didn't have on my bingo card. I would always say I would name
I
it
still
Twitter.
have a bit of a difficulty, but yeah, I'm starting to deal with it as well.
Correct, and that's nice. That's what nicely sums up, right? As Credify as our partners, they bridge, they use financing gap by connecting the crypto lenders with SME borrowers. There is an invitation to join the Telegram, which is something that I highly encourage you to go and check out. Leave them a follow. Click on the follow button while you're there at Credify_finance. And what can I say? It's been a pleasure to host you here again, Ivo. It's always a pleasure to talk to you, my friend.
Same here. Yeah, just on a final note, I kind of, we have just released a campaign with you guys, which is actually giving great rewards also for trying out ModuleX. So, for all of your community and of course everybody else, I do suggest you try out the campaign. You're basically getting an amazing reward with it. So, yeah, please check it out.
Correct. That's very right. And for to prove what Ivo is saying that it's actually true, let me pop in the message real quick, because ultimately that's what we're talking about, right? Eventually, it's a little bit of a giveaway for you guys to check out with the ModuleX stating from our partners to help them celebrate, because there's a lot to be celebrated. The rewards, the first 10 million credit tokens deposited get a 20% staking boost, which is 1/5. That's a lot for those who actually make calculations. The terms is that you get back 20% of your credit plus the new limited X credit after the 6 months. And how to enter, you just basically go ahead and buy credit with the contract address. Do always make sure to check up that all that connects with the correct address, and stake credit in ModuleX, right, as invited by Ivo, right? And it ends on June 5th, which is interestingly enough the anniversary of my marriage. So it's gonna be a good date. It's gonna be a good date, my friend. Ivo, it's been pleasure. It's been pleasure talking to you. Thank you so much for sharing your wisdom with us, with the Burb Nest community. Huge shout out to you, legend, to your incredible team at Credify. And like I said, the things look good. Me being a chartist guy, chart says overall up. So let's continue on your journey to the moon.
As always, amazing speaking with you, Adrian, and the Burb Nest team as well. You guys are the best. We love working with you as well, and yeah, I'm sure we're gonna reach far behind the moon.
That's it. Let's go to Saturn, Jupiter, and all the other stuff.
Exactly.
On some of the platforms, whenever I do this, they would pop up like those hard animations. That love goes to Credify team. Keep rocking, legends, and God bless you all. Thank you so much for joining.
All the best. Bye.
Ciao, ciao. Ciao, ciao.